Welcome everybody, my name is Jerry, and today we're going to talk about the futures trade of the week. That's right. So I don't always get a chance to put up videos every day, but I know I mentioned that before, but life gets busy. But we're going to at least try to put up one video or more a week talking about the futures trade of the week. So before you have a screenshot of my account, and you'll notice in the upper left hand corner there is April 26th. It's got an orange rectangle surrounding the date, April 26th, upper left hand corner. So that would basically be Sunday night, because futures trading starts on Sunday nights. Okay. Now below that you're going to see a blue rectangle with an arrow, blue arrow, and a little yellow number 1. So that's the M6E Micro Euro Dollar USD futures, and you'll notice it has a +2 right next to the blue arrow. That means I have 2 contracts long, and you'll notice the green circle, green oval, in red numbers $115. That means that it's currently trading these positions. I'm trading at a loss. Now that doesn't mean I have lost money. I haven't closed the positions, but I have 2 long positions that at that point on April 26th, they're trading at a loss, okay? Let's look below that. Below that, you'll see another blue rectangle. You have QG, that's E-mini natural gas futures, and you'll see a blue arrow below that with a yellow number 2, okay? To the right of that, you'll see another green oval, green circle, and I have 1 position there, by the way. You'll notice it says +1 just to the right of the blue arrow, and it's trading a negative $25. So if I were to close that position, I would lose $25. So far these are positions that I have that are currently open, but they're running at a loss. Okay, to the right, on the right side of the screen, upper right side of the screen, you'll see another blue rectangle, M6A. This is the E-Micro Aussie US dollar future. You'll see there's a blue arrow there with the number 3. You'll see the green circle there, green oval, says 0. Well, how come it doesn't have a dollar amount in there? The reason why is because I haven't actually taken a position yet. You'll notice to the far right of the screen there says -3 LMT. It might be hard to read, but that's what it says. That means I have an order that's sitting there, and I'm waiting for the price to get to the place where I like it, and then the order will go ahead and be executed, and I would pick up 3 contracts short. That's why they're negative. Matter of fact, all of these, well, the 2 on the right are long positions, but the 1 on the right I'm trying to get in on a short position. Okay. All right, let's move to the next screenshot. I want you to take a look at the very top of the screen, and orange rectangle, April 26th, but this time it's 8 o'clock at night. The previous one was in the morning. Okay, or I'm sorry, the previous one was like 5 or 6 o'clock in the afternoon. I think. Yeah, it was done at 6 o'clock in the afternoon. This one's at 9 o'clock at night. So same exact futures products, same number of contracts, but now you'll notice in the upper left-hand corner, it went from about negative $115 to negative $95 in red there. Okay, so prices are always changing because that's what trading does, right? Prices go up and down. Your potential profit goes up and down with it. So this particular position, two contracts on M6E in the upper left-hand corner, are becoming a little bit more profitable, but they're still running at a loss. Okay, the one below that went from negative $25 to a negative $12.50. Okay, getting a little bit better. And then on the right, you'll notice that all of a sudden now there's a dollar amount there, negative $96. So what happened is my order got executed. I picked up 3 contracts that I shorted. You'll notice the blue arrow to the right, upper right-hand corner of the screen, has a little yellow 3 in it. Look to the right of that, you'll see a negative 3. That means those contracts are shorted. Okay, whereas the other 2 contracts on the left, other 2 futures products, on the left, those are long positions. 2 in the upper left-hand corner and 1 in the lower left-hand corner, right? Okay, so 3 products I'm managing on Sunday night, because futures trading starts on Sunday night. It's 9 o'clock, Sunday night, April 26, 2020. I'm managing 3 different futures products at the same time. Okay, they're all E-micro or E-mini products, okay? Okay, so far they're all running at a loss, even though I haven't actually closed those positions. But if I were, I'd lose money. Okay, let's look at the next screenshot. Now this is the next day. Upper left-hand corner, orange rectangle, April 27th. This is in the morning. Okay. This is actually, I believe Monday. Yes, Monday morning. 11:31 Monday morning. So where are we at now? Same futures products, same number of contracts. Well, the E-micro US, Euro US dollar was trading at that point negative $122.50 for the positions that I'm holding. Okay. Let's look at the one below it. Monday morning, 11:31. I have 1 contract on E-mini natural gas. What do you know? It says $75 in green. Green circle, $75, lower left-hand corner. So you'll notice that there's a white zero, just to the left of the $75. What does that mean? That means I closed the position, I took the $75 profit. Okay? So I made $75 on E-mini natural gas. It went from, remember, that position started out as a negative $25, then went to a negative $12.50, and then became profitable at $75. So between Sunday night and Monday morning, E-mini natural gas, for the one position that I held, because that was 1 contract, I made $75 on it, and I closed the position and took it. Okay? We got an emergency vehicle going by, so I have to excuse the noise. Okay? Okay, upper right-hand corner. Again, we're still looking at Monday morning here. This is the M6A E-micro Aussie US dollar futures. It's trading at a negative $165. So that one's gone, is working in the opposite direction. It's not profitable at that moment. So I've closed 1 contract on the E-mini natural gas to take a $75 profit on Monday morning. The other 2 futures products, the positions are still open. Okay, let's move on to the next frame. Upper left-hand corner. This is 2 days later, April 29th. I believe this would be Wednesday, 9 o'clock, a little past 9 o'clock in the morning. You'll notice there's only 2 futures products here. I'm sorry, I know this screenshot wasn't that good, so it might be a little bit hard to read, but the reason there's only 2 future products instead of 3, because remember, I closed the natural gas position on Monday, so I'm only managing 2 futures products by the time we get to Wednesday, right? Okay, so upper left-hand corner, we've got M6A. This is still the E-micro Aussie US dollar futures. It's trading currently at negative $440. That's right. This product pricing has moved against me quite significantly by the time I got to Wednesday. Okay, that's the red circle, upper left-hand corner, negative $440. Now, I want you to take a look at the yellow circle, left-hand corner. It might be hard to read, but it says negative 6. Now, remember, if you were paying attention to the other screenshots, I had 3 contracts. So how did I get to 6 contracts? We're going to talk about that later on in the video, so stick around, because I'm going to tell you how, or specifically, why, when, and why do we add positions, add to our position? Why do we do that? Okay, that's going to be important. Okay, on the right side of the screen, this is the 1 contract I had for the E-micro Euro US dollar. You'll notice it's in green, $20 green, with a white zero to the left of it. Why is that? Because it was profitable. I took $20 and closed the position. It's not a lot of money, but every little bit counts. I made $20 on the trade, and I felt like it was a good time to do it. As it turned out, I think by Thursday, the next day after this, the Euro US dollar took off, and when I could have made a couple $100. But that's trading, guys. That's the way it is. You got to do what you believe is right. You got to understand your own risk levels. This was my target. I felt comfortable with it. I took the $20. That's the way it goes. Okay. So at this point, by Wednesday, I've made $75 on natural gas, and I've made $20 in the Euro USD future. I have $440 working against me on an open positions for the Aussie US dollar. So I haven't actually physically taken a loss, but if I were, I would lose 440 bucks on that particular trade. So at this point on Wednesday, up about $95 on actual positions that I closed. Okay. All right, let's look at the next screenshot. Now this is May 2nd, which is actually Saturday morning. You can think of it as the same thing as Friday close. Okay. So the market's closed for the week. And what are we looking at here? Okay, the upper left-hand corner, you'll see orange rectangle, May 2nd, right in the middle of the day, right at noon, 12 o'clock. Okay. So this is the M6A upper left-hand corner, E-micro Aussie US dollar futures. In green circle, what do you see? $368 positive. Okay. So from Wednesday to Friday, the Aussie US dollar began to work in my favor. Okay. But I want you to notice in the yellow circle, upper left-hand corner, you may not be able to read it, but it says -8. So I went from negative just means these contracts are shorted, by the way. If it was positive, it means it's long. Okay. So I went from a -3 contracts, remember? If you don't remember, go back to the beginning of the video. And then by Wednesday, I was a -6 contracts, shorted 6 contracts. And now here on Saturday morning, I've got a -8 contracts. So it's clear that I've added to this position throughout the week. Again, I'm going to talk here in just a moment. Why does that happen? Why do we add to positions? So at this point, on the close of Friday, I'm up $368 if I were to close in these positions, which I didn't. But if I did, I'd be up $368. So this is the biggest trade of the week. And so far, it's turned out really well. We'll see what happens on Sunday night when the futures market opens up again, which would be probably, I guess that's May 4th. Yeah, May 3rd, sorry. Which is tomorrow because I'm recording this on Saturday, May 2nd. So we'll see what happens. I'll take a look at that time. Let's look at the right of the screen. What is this? And there's a blue circle right-hand side of the screen, near the upper part of the screen. You'll see M6B. Where did that come from? Well, I actually took on a new position with a new futures product, I think on Thursday or Friday. And this was the British Pound USD futures. I took just one contract. I shorted it. And you'll notice that in the green circle there, on the right-hand side of the screen, it says a positive $26.25. So by Friday close, I was up $26 on this particular trade. Now, I didn't close this position because I think there's still a little bit of room for profit on this. Okay? All right, let's look at the next screenshot. Let's look at some math. Now, the only thing I'm showing on the screen here in this spreadsheet is the biggest positions I had for the week, which was the E-micro Aussie US dollar futures, M6A. Okay. Now remember, I said I added to this position. If you look at the very top left, you'll see a -3 on line 2, column C. The quantity or the number of contracts is -3. So that's what I started out with on Sunday night. I shorted 3 contracts. Look all the way to the right on the first line. You'll see a blue outline in column P. It says S price. For those 3 contracts, I shorted them at 64 cents and a quarter, or 0.6425. Okay. Look at the next line below it. I took on one more contract, a -1. And on the far hand right of the screen, you'll notice I took that one, shorted that one contract at 0.6454. So between line 1 and line 2, the price is coming up, isn't it? It went from 0.6425 to 0.6454. We're dealing with the column all the way to the right of the screen here. Okay, line 1, 0.6425, line 2, 0.6454. So the price is actually going up. So the reason I added one more contract is because I believe that the Aussie to US dollar futures is getting towards a peak. It's starting to approach a peak, starting to go up. Remember, I'm shorting these contracts, so you short them or sell them high and buy them back low. Okay? If you're not familiar with shorting, you can Google that. Or if you look in the description below my video, you can look at the video series of futures. Okay? So futures video series, 3 videos, really important. Go watch that if you're not familiar with futures, and it really help you out. And by the way, at this point, if you haven't subscribed to my YouTube channel, go ahead and click that subscribe button and click the notification bell so you can keep up with all the videos. And I would really appreciate if you click a thumbs up. It really helps me out with the YouTube channel. Okay, back to the video here. Now let's look at the third line. You'll notice in column C, in quantity or contracts, from that point on, I'm just adding one contract at a time. I'm just slowly, I'm not jumping in there with 10 contracts. I'm not even adding 3 more. I'm just adding one contract at a time. So let's look to the far right-hand side. On the third line down, all the way to the right, you'll notice the S price is on the third line is 0.6518. The price is still coming up, right? And the next line below that, add another contract, the price is still going up, 0.6544. The next line below that, look, the price actually came down a little bit, 0.6534. And then the very last line, all the way to the right, you'll notice the price has come down again, 0.6486. And at that point, I stopped adding to my position. You don't see a line, you don't see another line below it, right? As the price began to come down, I stopped adding positions, or stopped adding to my position. So at this point, if you look at the second to the last column to the right, it's highlighted with like a purple outline. That's my target price to get out, 0.6376. Now, at this point, on the close of Friday, it didn't get down to that price. Okay, but that's my target price to get out of these positions. And if it does get out, if I do get out those positions, I'll make $803 on these contracts, okay? Now, let's look back to the left. You'll see like kind of a yellow mustard-looking column says margin rec. That's the margin requirement. At the very bottom, you'll see $2,160 with a yellow circle. That's me keeping track of how much margin requirement I have. That's my broker telling me, hey, you better have cash and or assets in your account equal to $2,160 or greater. Okay? So you need to know your own account. You need to manage it. This is me managing my positions, and I need to know what my margin requirements are, okay? Okay, so the reason we add to our position, the reason we go from 3 contracts to 8 is because it's very difficult to perfectly time a peak or a valley in anything you're trading. That's true for stocks, options, futures like what I trade, okay? Or Forex, currency traders, which, by the way, I trade a lot of currency. I just do it in futures instead of Forex, okay? So it's very difficult to perfectly time and nail the peak or a valley, a low point, a high point or low point. It's very difficult to know exactly when that's going to happen. So as traders, what we do is we watch the market. In this case, for the eMicro Aussie US dollar, I'm watching the pricing and other technical data, which we'll get into other videos, and watching that throughout the week to see, are we approaching, in this case, a peak? And I believe that the pricing was approaching a peak, so I slowly added to my position. Because since we can't perfectly time when we're going to hit a peak, we add to the position along the way. Okay, that's called managing your positions. Okay, and that's why we add to positions. We're going to catch the peak, but we're going to do it gradually. Okay. Okay. Let's look at the next frame. So this is the same product we were just looking at on the spreadsheet. This is just a chart. This is the eMicro Aussie US dollar, M6A. You'll notice in the middle of the screen you see a green rectangle. So there's 5 candlesticks, which just represent pricing. If you're not familiar with candlesticks, you can go and Google that or your favorite search and look up, candlesticks. So inside that green rectangle, the first candlestick on the far left, that's Sunday night / Monday, because Sunday night and Monday are the same candlestick. And then the next candlestick to the right inside the green box, you'll notice it's higher, right? That means the pricing is going from low and it's starting to go up. And the third candlestick is Wednesday. So the price is going up. Now remember, I was adding to my position one contract at a time. So on Sunday, on the candlestick to the far left inside that green rectangle, that green square, I shorted 3 contracts as I believed pricing was going up. Sure enough, you look at this chart, it's pretty obvious pricing is going up, right? And then on Tuesday, I added another contract. And then on Wednesday, I added another contract. Okay? I might have added 2 or 3 in there all at once, instead, I should say I added one contract at a time. They might have been close to each other, like 8 hours apart or 12 hours apart or whatever. Now, if you look at Thursday, you'll notice that candlestick is filled in. That means the price came down. And the last candlestick, Friday, the price came way down. Okay, so I stopped adding to my position somewhere between Wednesday and Thursday. As the price was near the top, I stopped adding. Okay, I kind of stopped somewhere in there. I don't remember if I may have even added one on Friday. I don't remember, but basically I'm managing and adding to my positions at the very top of the Aussie US dollar. Now the next candlestick that's going to come up is going to be Sunday night / Monday morning. And I'll be carefully looking at the pricing. Okay. You'll notice on the screen, if you look to the left side of the screen, you'll see a +8 LMT. That means I have an order in there, a limit order of buying back 8 contracts. You remember earlier on the spreadsheet I said my target price was 0.6376? Look at the price at the top of the screen, 0.6421. So we're not too far away. Okay. Basically, that green thin line going across the screen is where I want the pricing to come down and touch. Okay. Or at least go below that, and then my order would be executed. It would buy back my contracts. Or in other words, it's called covering, because since you're going to short, you got to cover your shorts. Okay. Basically, you sell your contracts, which is negative, and when you buy back the contracts, that's positive. Okay. So I'm looking to cover or close my position of 8 contracts. Okay. So I hope you really enjoyed the video today. Remember, if you haven't subscribed, go ahead and click the subscribe button and click the notification bell so you keep up with all the videos. This has been the Futures Trade of the Week. My name is Jerry, and we'll talk to you all again next time, real soon.